What's going on? What's going on, guys? That was quick. You were in here quick, man. Peace, my brother. To the boys in chat. Let me just get this one sent out to the Discord, the free Discord. Oh, I want to do that. All right. Cool. What's going on, guys? How are we doing today? How are we doing? Do we make money today, man, or do we miss out on this run up, man? This is pretty wild. We got U.S. indices approaching all-time highs here. Pretty wild. Break even, Bruce Lean. What's up, man? Missed it? Yeah, I feel you, man. I missed it too. I want to do a trade review with you guys. I'm done trading for the day. I'm green on a few different accounts, and I'm gonna leave it that way. I was listening to the guys on the Top Step Live. They're like, "How do we structure risk? You just have to smash the buy button. You know, buying this late in this move is just wild. You know, we're really at all-time highs, so." I don't even want to say that I'm going to live trade today because I'm not. I'm done. Can't long this. Yeah, I know. Can't long this. Damn sure can't short it. No, man. If you're short in this market, like, you're stepping in front of the freight train, man. You know, it's really hard to get long anywhere over here, man. Super hard. You know, no way to structure risk. It's not really in anybody's. Anybody's approach to just be buying with the trend and arbitrarily throwing a stop loss down. So I'm not going to do it. But nice, man. Very nice. Good to hear that, Bruce. A couple guys from Discord that are killing it, making money, man. What's up? If you're not in the free Discord, hop in the free Discord. I'll repeat that 30,000 times. If you get some value out of this, smash the like button. But I want to do this one as a trade review. I usually go over kind of what happened on the day anyway. This one was pretty interesting. Good example of where holding your trades longer would have played out in your favor. This one I was not expecting at all. I figured I might miss a little bit of the bounce, but man, watching this run all day after having a long on that I was holding in the morning was a little bit frustrating. Be happy to report I didn't get FOMO. I didn't FOMO back in. Really no other trading, but this is one of those days that just tests your discipline to not just go on tilt and start trading away. So this morning's, if you guys watched this morning, or if you're in the Discord, you'll see the private YouTube video that I got the trade on the news. It was right before CPI. Obviously was just a straight up news trade. Really was doing it, again, was asking guys in the Discord if they get slipped a lot in futures. I come from the Forex market where spreads and slippage is a very real thing. If you have a trade on and you're caught on the wrong side of this move right here, you could get a really terrible fill. You can get slipped pretty damn bad, and it really just takes news trading off the table for a lot of brokers that happens to. If you have a stop loss in here, you have risk accounted for, and all of a sudden your fill is way up here, it can be a massive issue. For this, I went long. I'll pretty much just arbitrarily, either flip a coin or go long. Long is my preference. Long America, baby. Stop loss down below this low. A couple contracts on, and I got slipped in my favor 10 ticks. 2.5 points on ES. It was all over here this morning. So it was $125 on 2 contracts. I had my take profit set at exactly $1,500, which is the maximum amount for the 50K that I was trading on. So it worked out in my benefit, but it displays some of the volatility and the extreme price movements during news events like this, where you will get slipped. If that was a stop loss, it probably would have been tighter. And if it was down here earlier in on this move, I might have gotten an even worse fill. I might have been slipped for even more. And it wouldn't have been in my favor of me making more money. I would have been losing more money than I was bargaining for. That's the deal with limit orders. So it's interesting. Again, the one worked out in my favor. I got a lot of testing to do still in the futures market, and then specifically with different, the brokers that I'm dealing with, or Top Step, the platform rather. So yeah, that was this morning's deal. This one was actually through Trade-O-Vate, so not that matters too much. But yeah, that was the morning trade. Again, you can go back and watch that. You can watch it on the recap. You can watch it if you hop in Discord. I made a video just specifically of that one. These were my trades from this morning, also on the recap. If you want to watch them live and confirm it, you could see it there. Two trades. Went short off of this move here. Pretty early on in the trading day. We had price really reject up here 2 times. This was the pre-market high, the high of this move. I was only expecting to short it down to the VWAP line on the 5-minute. I was just not really feeling good about this trade. Felt like I was a little bit early on watching this bullish price action, so I ducked out pretty early. Ended up being profitable, but it's kind of just a quick in and out trade. The second one that end, had I stayed in that one longer, it would have came all the way down to the VWAP line. That was my initial target. So trade number 1, improvement, could have been, entry was fine, risk was really fine. These are low risk trades. Yes, you're against the trend, the overall move, but you have a clear way to structure risk and you can capture a nice move. Had I just stayed patient on this one, I would have made it down to the VWAP line, the daily VWAP line that I was targeting, which was also the low of this news range move. If we see it on the 1-minute as well. Again, I was looking on the 5-minute, so I want to stay on the time frame to know where I'm at. It was also the low of this move here. So this was the initial target. Again, ducked out of that one early. That's just it. Reading price action and having that discretion to manage your trades can work in your favor. But sometimes that experience and intuition is not going to help you out. Today, it worked against me, at least on trade management. So this was short number 1. Buy number 2 was pretty simple. It was obviously super bullish move. Price pulled back down, broke below this low, tapped into this gap here. This stacked imbalance that was showing on footprint as well. Started to bounce, hesitated right here on the 5-minute candle, and then started to bounce off of the nice VWAP line. Again, just breaking below these lows, tapping into this as a stacked imbalance, following trend, following structure, expecting this to continue at least back up to these highs was my first target, and potentially hold for a break. If it was going to push through here with some force, I was going to hold on to it for a little bit longer, but ended up closing right here. Again, you can watch it in the recording. Here was my entry right after a nice bullish close and a break above the close of this candle. That was my entry to get long. Worked out well. Picked up 39 ticks on ES. This is the exact entry and exit, and the time that it was taken. Worked out pretty well. Again, I'm gonna chalk some of this up to not an excuse, because there's no excuses, but I'm gonna chalk some of this up to getting used to just a little bit slower price movements and price action on ES, especially on the 5-minute, over what I'm used to on US 30 and NASDAQ. I start to read some of that as hesitation, price action, really struggling, buyers and sellers really balancing out, and, more of a chance to turn. And I've got to just do a little bit better job of taking a breath, going to the bathroom, chilling out, and, and just letting the trade run. I mean, this did, chop around for quite a bit, but it really was on a nice move up, and it really didn't give me a reason to close outside of just breaking above. If you look on this candle, just breaking above and closing right at this line. Yes, there's a chance of reversal there, but obviously today this did not do that. Still ended up being a nice positive risk to reward on this trade. Don't think it was it was not a 2-to-1. I had like $330 something or $360 something worth of risk. It was about a $500 win. Just under a $500 win, if I'm remembering. But holding for a break of this level and a push up would have been nice. I probably would have been ducking out over here if I was closing based on price action. But if I had just chilled out in this one, maybe trailed my stop up or even a little bit further, I would have been fine. So I'm chalking this up to Just getting a little bit more comfortable on some slower moving price action on the S&P, on ES. But again, want to just display this stuff to you guys because I think it's helpful. I think it's helpful to review other people's trades with them, to hear the thought process, the reasons for entry, the reading of price action in the market, and what happened. But again, I got to say, I've really been getting more and more comfortable using VWAP. This is just the standard daily VWAP. It's under indicators. This is the anchored VWAP. It's a drawing tool. It's not even under indicators. Where is it? It's under projection. So it's this anchored VWAP. You just select the area that you want to anchor it to, and there you go. It anchors to a certain level. So I've been using the 9:30 a.m. as a secondary one. I decided to use this news deal just to get a feel for average price based weighted by volume. Price reacts around these levels very, very interestingly. Even on the 1 minute, you can trade in between them. If you're trading smaller price action, in my opinion. Maybe I wasn't looking at ES on the 1 minute. Maybe I was looking at NASDAQ with an anchored VWAP. Well, anyway, you could trade in between them. You could have done it on the 5 minute here. Maybe you're taking the buy just on the start of the bounce there, and you're trading towards an anchored VWAP or another level. But again, just showing you guys not standalone at all, not an indicator based strategy that I use. It's market structure and price action. These trades are coming from. Here's the push up. Here's highs. Obviously, these are the levels that I have marked. Here's the the lows down here. Came and took those out and then started to react, utilizing structure, utilizing price action. Again, utilizing structure and price action for my exit, that type of deal. But adding these in has been helpful. I'd be lying if I said I haven't found it very interesting to watch VWAP and utilize that. Again, I also run TradingView's footprint tool on the side. I don't like to try to gatekeep anything. It's a beta new tool from them. I pay attention to stacked imbalances mostly off that. Sometimes delta that can kind of help, but I don't take any of these too strongly into the actual decision making. But I do like to talk about the stuff that I use. So yeah, again, holding this one down to my initial target level would have been the smart move. That's the only way that we're gonna have trades like this play out profitably over time, unless we have a super high win rate, which I do not. So this is one I definitely should have held. This one, I'm okay with this type of win. On another day, maybe it reverses here, and that's okay. Again, I would have liked to have at least waited until this candle here for a closure. Wouldn't have made a whole lot of difference, price wise. I probably would have gotten out there. Maybe if I was trailing a stop a little more aggressively and just letting it run, I would have been okay. The other deal here is I've got to just step it up to multiple contracts. I get way more comfortable holding a position if I can scale out at a 1-to-1 or past a 1-to-1, and I can only do that if I have multiple contracts on. So I'm likely going to trade with at least 2 contracts, try to find a way to structure risk with 2 contracts that's not taking on too much. So yeah, these are my 2 trades for today. Again, missed out on this massive move, stayed patient. I made my bed, didn't try to FOMO back in, didn't get antsy, try to pull anything wild. Would have worked out if I was on the buy side again, but that's just the nature of it. So holding trades, I talked a lot about this last week, I think, or early this week in the Discord. It's just it's something that almost everybody can work on doing better. It's not always going to work out. Again, this could have just on another day completely reversed from here, been tapping against this level, and we're going to come back down in here to fill this gap that was left in price action. Maybe, but you got to work on making your winners a little bit bigger than your losers. This is fine for me. This one should have definitely been held, or I should have let it run back to be a loser, or stop loss to break even and just been stopped out. So again, my approach to this is going to be scaling in and out with multiple contracts as a way to, as like an antidote to that, not wanting to hold the trade too much longer and let it come all the way back to break even, and then just letting the winners run a little bit longer and taking more of those losses and break evens on the way to that. That's just the nature of it. So those are my trades from this morning. the nice big fun news trade immediately $1,625 in profit. I actually had to trade a couple times to take a little bit of the profit off of that 50K. So green today, haven't been fantastically green. If you've been following along, tough start to the week for me, multiple losses. Coming off of getting a little bit too aggressive on the 50Ks, calmed it down. Don't want to display just that wild buying the accounts only because they're $19 and trying to just go ahead and pass them super aggressively. It definitely takes some time, but I'm working on doing that. Yeah, NASDAQ just still running. This is absolutely insane. I don't think really anybody was calling for this. If you were, I hope you were on the long side of it. But welcome if you're hopping on. Appreciate you being here. Hop in the free Discord. I talk about all this stuff in the free Discord. Giveaways, discounts, market analysis every day. If you guys were caught off guard and you're in the Discord, I don't know what to tell you, man. I posted about this 3 or 4 times, maybe not 3, for 2 or 3 times, tagging everybody in Market Insights and then in the main chat and then tagging everybody again, 10 minutes. This is something that, can we predict which way it's going to go? No. Can we predict how big the move is going to be? Certainly not. But you can predict, based on the release of the event and the scheduled time, that the 8:30 candle is going to be significantly larger, and there's going to be an uptick in volatility and volume at that 8:30 candle. So decide to get out of the market, decide to structure your risk, decide to YOLO an account for fun and to test the slippage in the futures market like me, and maybe get on the right side of it. If you do that, great. If not, run a pretty tight stop loss, and then even then, you're risking getting slipped and getting a worse fill. So last thing, trade-wise, I wanted to talk about was some overnight trades. I talked about this a little bit last week. I've been looking at a way to get my fix on the swing trading stuff. If you know anything about me from before, came from Forex, did a lot of Forex day trading, but had moved to some higher time frame stuff. I was sharing that a lot early on the 1 hour and just higher time frames. Nice and calm. Ability to swing trades was nice. If you're dealing with a Top Step account and you're in the U.S. indices in general, maybe you don't want to swing trade. You can't hold trades for longer than 1 day. You have to close them out by 4:10 p.m. Eastern. Then you can open trades back up, start trading for the next day at 6 p.m. after 6 p.m. Eastern Standard. The new Top Step X even goes trading closed for the day or something. Gives you some alert. So I've been looking at entering trades based on higher time frame market structure and just what went on that day after the market opens back up. For me, sometime around 6 p.m. to 8 p.m. Eastern, entering a trade with the intention to hold it overnight, swing trade overnight. And for me, maybe closing sometime. Earliest would be whenever I get up. Maybe it's between 5 and 6 a.m. and likely not holding it into NYSE open at 9:30 a.m. So here was my trade from yesterday. I think I talked about taking a short trade on the live back into this gap here. What happened on this one is the 15-minute chart. Open back up. I said, you know what, let me jump in. Hadn't been taking ones earlier in the week. Jumped right in here as price pushed up. Figured again that we were just going to start to come down and crack below these lows, maybe tap right into this level. My target, this was a pretty aggressive risk trade, but that's just relative to the account. My target was right at this level. I figured we could easily crack back down, even if we were going to continue back up, to tap this level, if not come back down to these highs and fill some of this imbalance on this big push up. A lot of times after the big push up, there's a correction. So that was the move. Aware that we've got really bullish structure and price action, and that I'm taking a short trade. But if you have to take one and you only really get one opportunity, a couple hours at night, I'm testing out how this is going to work out in the long run. How this one worked out was I set alerts just in case price starts moving very quickly before I go to bed. It did trigger an alert for me here. I think this was, right around here. Some underlying driver, Biden announcing a tax on China and something along this time frame caused a nice push back down. I got the alert, and then I started to get a couple alerts, volatility increasing, that type of a deal. I trimmed this position, closed 3/4 of the position right down here. This is, what was I marking with this line? Yeah, this was a 1-to-1. We got 80. This was a 1.88 risk to reward for the whole trade. 80 ticks of risk on the trade. Here's 80 ticks in profit. The 1-to-1 had been hit. I ended up closing. My fill was somewhere down here if I went back and looked at it. About 3/4 of the position. Again, had multiple contracts on this one on NQ. Move stop loss to break even. The remainder was stopped out at break even. Had I let this trade run, I wouldn't have been stopped out. It would have got pretty damn close over here. Wouldn't have been stopped out and would have gotten a close probably right before CPI, if I'm being honest. This is 3:40 in the morning. Wouldn't have closed it here. Would have been trailing around, and I would have been, holding it until the goal with these is to hold it through pre-market, catch the overnight and pre-market trend, hopefully in the direction that your, technical analysis is lining up for, and then get out before the volatility of a news event at 8:30 or 9:30. So probably would have got a close. Maybe I wouldn't have waited till right before. Probably would have got a close somewhere down here. Somewhat similar. Would have had the whole position filled down here, so would have been a little bit better if I didn't touch it. And I probably won't in the future. That'll just be that'll be something that I pay attention to. How that trade management is affecting the outcome of the trades, but not common for me to be testing it, to touch it. Again, if I set it, I set a couple alerts, somewhere halfway to the stop, halfway to the target. Maybe it was probably halfway to the target, 75 ticks in profit. That triggered. I figured, you know what, let me reduce risk on this one, make it a risk-free trade, and that was fine. Again, reasonings behind the trade here. Looking, for a correction. We made it all the way up to the zone, marked out by higher time frames here. This level over here is what I had marked out for this zone. Last high before an impulsive move down, right before these highs. Price had climbed all the way up there with really, really, really bullish structure here. Figured we were going to likely see a retracement. Again, my entries on these are not super exact. They're not pinpointed because, I've only got a limited time to enter. A couple hours, before I'm headed to sleep. If I'm going to swing it overnight, I could decide not to trade or I could decide to enter it. Price pushed up. Yeah, I think I had a little bit past 6 o'clock. I waited for it to push up a little bit more. Stop loss is just going to be above whatever the structure level is. I'm not going to want to take one of these if I can't get a stop loss above level of structure because a lot of times, it cracks right back up. Takes everybody out, anybody that's running a position, and comes back down. So I like to run, pretty wide stop. This was about 20, let me be exact with it. Yeah, maybe 28, 29 ticks above the high. Would have kept me in on this big wick right there, which is nice. And then, targeting an area that I think is easy to get hit. I don't want to target something so far away because, it'll move all the way into profit. I can't move stop loss to break even. I can't scale out if I'm sleeping. So I want to make it something that I think the market is likely to go tag, on the way overnight. So if I do this for this evening, if I look at my analysis for this evening on the 5-minute, let's come out to the 1 hour, all the way up near the all-time high, putting in all-time highs, right? Massive bullish structure. If I want to trade with this trend, I want to be taking a buy. I get that. If I want to trade with the more recent time frame daily trend and all the way down to the 5-minute, I want to be taking a buy. But what am I really going to be looking for here for overnight as price starts to consolidate and then maybe into pre-market tomorrow? Some sort of a retracement off this high. Can price blow directly through here? And is it looking like it wants to and just continue running? It does. It really does. But experience, intuition, reading of market structure and price action is telling me what's the lower risk trade and the one that has a pretty good potential of playing out. It's a sell to the downside, catching some form of a retracement into pre-market tomorrow. Sellers step in heavily at these levels. If the shorts are going to come in, they've been getting killed all day. This is the level for them to come in right at the top, and catch some of the retracement off. You get moves like this. If we look at this one, came back up. This really did crack above this pretty quickly, and then did retrace off. But you could say that for a lot of other levels where that didn't happen. Just blasting above it. So just giving you guys an idea of what I'm looking at for an overnight swing trade if I decide to take one. We're only at 249 here. I probably won't be touching this for another 3-4 hours. I'll watch what starts to happen. If we open back up at 6 o'clock and we still have price creeping, maybe I just hold off. If it retraces really hard into that 4 o'clock time frame, maybe I don't have a way to structure risk. Again, the only way that I'm going to take one of these is to have a nice clean way to structure risk. That's the only benefit of selling in such a big strong uptrend is, if price is going to continue moving up, it's going to take you out of the trade. You were wrong, idea invalidated, done. Nice simple move. The difficulty buying on this uptrend here is how the hell do you structure risk? You buy here, it could easily crack all the way back down and then continue blasting off. Your stop loss being anywhere in this area is just your arbitrary stop loss based on your entry, which is not really a great way to trade. So, this was end of day here. Maybe I got something like this going on. I go with a nice wide stop loss in the S&P. Yeah, maybe like 20 ticks above, something like 5 to 8 points above, nice and wide. And I'm going to target, something that I think can easily be hit back down into this level. Maybe I get a, if I went for a really deep target on this one, okay, sorry, with the shift key, something way down here. But again, I'm going to target this, something that I think can hit. Maybe it's just down to these highs, the daily VWAP level, this area that's been traded down here, somewhat of a corrective move. Don't know if I'm going to take this. Not a suggestion or recommendation to do anything. Just giving you an idea of these overnight swing trades that have been working out pretty well so far. I've had a couple absolutely fail, a couple work out really nicely. I take on a bit more risk just based on trading at minimum one contract on NASDAQ or S&P and having a much wider stop loss. It's a one and done type of trade. I'm typically doing it in an account that I'm kind of going to say, all right, I'm going to take the trade, see how it goes, and that'll be the trade for the day. I've been trading the Nikkei at night. Low liquidity, but moves nice for Asia. Nice. Respect, support, and resistance. Pretty good. When it breaks, it normally continues. Nice, man. That's cool. I might have to look at that. For me, this is just a nice another way to be paying attention to the indices that I'm trading. I really like to be hyper focused. I've talked a little bit about that. Coming from Forex and having all these pairs, it's been nice to just hyper focus in on one instrument, one product, one asset. And if I'm expanding outside of that, it's still a US indice that tracks pretty closely. So you end up with just a really good relationship. You know what's going on day to day, week to week. You could almost draw the higher time frame structure because you check it every day and you remark it up every single day. So you really start to develop that memory of price action and market structure. And then again, you watch it play out. You get really comfortable. I'm chalking up some of this hesitation to hold winning trades to just not being comfortable enough with ES specifically. Watching NASDAQ for so long and NAS 100 when I was watching NAS 100 and even Dow, the way Dow moves from a price action perspective, just more volatile, quicker moves, especially on the 1 minute, 5 minute. Coming to ES, it's kind of like watching paint dry. It's actually nice, trends nice and tightly. You don't get these crazy wicks. Guys call them scam wicks, just to say scam me out of a good trade. You don't get as much of that, and you get this slower movement. And as it approaches levels, maybe it's not telling you that it's struggling there. It's just how it's moving slow. That's it. It's going to break right through and keep climbing its slow way up. But just some subtle nuances to day trading on lower time frames that can help you if you're trading a discretionary system that relies on your own, you could call it active trade management, dynamic trade management, where I'm going to apply my intuition and my discretion, my reading of price action in that moment. You have to develop that. It's going to rely on your skill a little bit. So that's pretty much the overview, man. Trades from this morning, trade on news from this morning, and overnight. overnight trade on NASDAQ. Wanted to jump on. Again, I'm green on just nice green day, so I'm not going to touch it. I don't have anything that's lining up for me. Like Bruce said, can't long this damn and can't short it. So I agree with that. We'll potentially see some volatility here into the last hour of the day. I'm waiting to see what we get, saving it for maybe an overnight swing trade. Again, this one's tough because the all-time high level is pretty tough. But again, if I have to take a trade, and that's kind of the way these swing trades work out, it's either trade or don't trade, and you get one specific time frame to put that trade on. For me, like a small window, maybe 2-3 hours at the most before you're going to sleep, and then you let it play out into pre-market. So you're trying to not predict the market, but react to where it's at, read price action, read market structure, and put a trade on that you think is a high probability of working out and a good opportunity to structure risk and make a little bit more when you're right than you lose if you're wrong. That's pretty much it. With most of these trades that I do, I want at least a 1.5 to 1, if not a 2 to 1. I want to run a wide stop loss, so that does eat into that a little bit. But I don't have to win, even 6 out of 10. If I'm flipping a coin and winning that many, making money. So looking for a retracement in the night session. Yeah, man. Again, we didn't really get it over here. We didn't really get it over here, right? Like I was expecting. Obviously, news was what kicked this off, but this to me could have easily ran down to this level, tapped this, and then continued up. A lot of times you see after the big move, some kind of retracement. It doesn't have to come all the way back down. It doesn't have to clear up all the gaps. But, you don't always get that. We just got a little bit of consolidation, actually a push higher, and then back down into the range, and then a continue just a blast off. So, we might not get the nice retracement back down, towards these highs, towards the, this level here, this zone, which is marked out by, again, another price level right here. That's what I think a lot of traders are respecting. It doesn't have to do that. Maybe we just go to the moon with the U.S. indices. That's just the risk that you put on when you take a trade. We're putting on risk in the market. It's an uncertain outcome. If it was certain, if we knew it, I've been in so many different groups and so many communities and places where I knew it was going to see, I told you it was going to turn there. I knew it was going to turn there. Really, bro? Did you remortgage your house and sell your car and put everything you have on that trade? Because if you knew it, you sure as shit should have been doing that. So no one knows anything. I don't know anything. I'm just going to find ways that I think that something is more likely to happen than not happen, and find a way to structure risk in a way that tells me if price gets to this level, I want to be out. And it's a likelihood that if it goes in the direction, it will go farther in the direction that I'm trading in rather than the direction against me. I'll make a little bit more when I'm right, lose a little bit less when I'm wrong. Bruce Lean, my man, says, hate trading all-time highs since part of my strategy relies on some previous data. If we hold overnight, if we hold over, that might wait for some new levels to form. Yeah, maybe something else on some. Yeah, I got you, man. Yeah, no, I agree too, man. Like when price starts to run, if I'm not in the trade, a lot of times I don't get a second chance trade because I like to have some level of price action to trade off of. I like to have a trade idea. Again, like let's go through this trading idea right here. We can go through both of these. When I took a short from this level here, my theory is that price is rejecting off of this level. It's pushing down. It is not going to break above this level before it comes down towards this VWAP. So my level of structure to structure my risk, my stop loss was somewhere up here, because if I'm wrong, I'm going to know about it quickly. It's fine. Whether I'm wrong or not, the trade is not going to work out. It comes back up. That's it. Takes me out. My thesis is wrong. My read was wrong, or just the market is not going to respect what I believed it was going to respect and come down. If it's right, if I'm right, and the way that I'm trading, it should come right back down here. But that's the level of structure that I have to trade off of. Same thing down here. I have lows to trade off of. It came down, It broke below this low. We're trading in the direction of this trend. All the things we discussed, right? We got level up here that we want to see it come back to. We had a level down here that we were looking at, this range. We are bouncing off the VWAP line, and we've got price action. We've got momentum, volume continuing up. I'm getting long here, right? I don't want to see it come back down here, because if it's going to come back, if it's going to continue up, which it did, we're right. Great. Congratulations. Slow clap for everybody. I don't want to see it come back down here. My stop loss is below this level, because if it comes down here, I want to be out of the trade. I think it's less likely to just blast back up. Here's its opportunity to do so. I'm entering with momentum. If it needs to come back down here a second time, it's less likely to continue up, in my opinion. I think it's more likely to slice down below this level. And if that was happening, I probably would have been getting short had it not broke down too quickly. When you don't have areas, when you don't have that to trade off of, like when you're looking at this massive run up, you're waiting for a pullback to a degree. Maybe over here after the continuation, you have an area to trade off of, but that's pretty much it for me, man. Maybe right here, you got an area to trade off of, to structure risk, a way to place a stop loss to say, if price comes back down again now, I want to be out of the trade. But for me, looking at this, price could pull back down to here from this level and then continue another, 200 ticks in the direction of the trade without breaking structure, without a change of character, without, we don't need to use the technical terms. We could see where the higher highs and higher lows are, until it comes way down here and starts breaking below this low. We really don't have a reason to say, hey, this thing is flipping bearish. We want to be looking for sells. So, that's the need in my playbook to structure risk, to have a way to say, where on this chart do I not want to be long anymore? Because that's where you should be placing your stop loss. You should say, up until this point, I want to be long the market or short the market. At the point that you no longer want to be long or short, that's where your stop loss should go to take you out of the trade. If it's taking you out before that level, you're exiting early. And if you don't have a way to structure that risk in a way that makes sense, it provides a good risk to reward ratio, and a good way to structure your risk, maybe you just don't take that trade. So a lot of times I get left in the dust if I don't get the pullback that I'm waiting for and the way to structure risk. That's okay. It's not technically a missed trade. For me, it wasn't my criteria for entry. So it just wasn't a setup for me. So that's my analysis. Guys, if you're on here, man, hop in the free Telegram. Live trading, market analysis every day. I called this out 10 times, not the move itself, but to tell you, hey, 8:30's coming up. Wake up, pay attention. Discounts to Top Step, gave away 6 50K Top Step accounts this week to 6 members, announced 6 winners of that giveaway. I'll be doing more of that. A community, the best free futures trading community on Discord. That's what I'm building, man. If you like the video, hit the like button, man. If you don't like it, don't hit the like button. If you don't find it valuable, don't subscribe. Don't hit the like button. Do whatever you want. I'm not going to beg anybody to do anything. But if you want to help me out while I'm out here doing this stuff for you, for free, who's hanging out, maybe you found it valuable. Maybe you paid attention. You learned from some stuff that I did well today, some stuff that I could have done better, how I mark my charts up. I'll answer your questions here for free as well. Help me out, brother. Help a brother out. Hit that like button. Yeah, bro, I remember you keep popping on. Hey, man, last time I left asking, I take 2 trades, make profit, and then third, give it all back to the market. Okay, I'm gonna try to just to give you an example from my world today, right? Because I don't know all the nuances and intricacies of how you're trading, but I can give you some rules that you should probably that you might want to consider putting in place, that I might want to consider putting in place. Not financial advice, not a recommendation or suggestion to do anything here. Nothing that you see here today was a recommendation or suggestion to do anything. I'm not a financial advisor. I'm an idiot. This is just what I do for fun. It's on Top Step accounts, so read the CFTC rule, simulated stuff. Most traders lose money. You're probably going to lose all or more of the money that you trade with. Trading is extremely risky. You should talk to a financial advisor if you're thinking about getting involved with the financial markets. Everything I do is for entertainment purposes only, not educational or even advice or suggestion. So let's talk about this, bro. I'll talk about me. I took multiple trades today, right? I could have continued on trading here. I opted not to. One of the rules that you could put in place is a profit rule. Once you hit a certain level of profit, you stop trading for the day. This is not really so advantageous for traders to do, especially ones that are experienced, because you're taking yourself out of the market, of the opportunity to make more money if your setup presents itself. But if you routinely are giving back profits and then some to the market, maybe we consider taking ourselves out of the market once we're in profit by having one of a couple different rules. One can be a number of consecutive winning trades or a number of consecutive losing trades, regardless of the profit. Maybe you say after 2 winning trades or 2 losing trades, either or, I'm done. You could also say after a certain amount of profit, whatever the dollar amount is, maybe it's $1, maybe it's $100,000. We don't know what everybody's trading with here. Maybe it's, whenever I make $1,000, I'm done for the day. As soon as I'm green, I close out, I'm done. Whether the trade's moving in my direction, whether I see another setup, I'm out. Set yourself some risk management rules, and be disciplined enough to follow them. If you trade with Top Step, you got a really cool feature up here. Manual lockout. I actually think this is kind of cool for guys like yourself that are struggling. This is a manual lockout feature on Top Step. It's kind of funny to me. It locks you out of the account until the next trading day, for whatever account you're on. So you can get into profit or loss and say, that's enough for me. I don't trust myself. I'm going to make sure I can't trade anymore. Do that by just closing your whole computer down, your phone, log out of the accounts once you're done, man. But that's really, without knowing in more detail how you're trading, the way that you're trading, the strategy, the approach, the risk management, the best thing I could say, and again, I really don't recommend these to everybody, but especially on the profit side, but put some hard rules, in for yourself. Tell yourself, I'm done. I'm not going to be trading past this because I journal, I pay attention, I write all my stuff down, and I notice that after 2 winning trades, or whenever I run into profit, 1 or 2 trades, I almost always give that back to the market. It's most likely from overconfidence, man. We all have the same, we don't all have the same, but we all have similar, instincts and emotions when it comes to managing risk. And it usually works against us both ways. Let me give you the example, brother. When you're making money, overconfidence becomes the issue. You start increasing risk, taking trades you're not supposed to be taking, or leveraging more than you're supposed to be leveraging, taking on more risk, and you give it back because you're overconfident, you're not following your strategy and your approach, you're not trading from a clear head. You're thinking that I can't win and I can't lose, and that's it. A lot of times the same thing happens when people start losing money. You take 2 consecutive losses, you run your account down $1,000. You go, screw it, man. I'm going to over leverage and over risk because maybe the odds are in my favor, or I just don't care. I'm seeing red. I'm going to get revenge. I'm going to make this back in 1 trade. Same thing happens, man. You give it all back and then some, or you just run the account into the ground. That's what that's what really would eat at me more. Everybody's different. The consecutive losers, the consecutive drawdown would bug me more than the consecutive winners. I seem to be able to stay a little bit more level-headed, a little bit more reserved after winning trades than I am after multiple losing trades. So what do I do with that? Just like yesterday, took 2 losses, curb it, man. That's it. Ran the account down in red. I'm not going to try to continue trading. I jumped on in the afternoon to trade. It's just not there for me. That's it. End the day, come back the next day and have multiple wins. But when you're in profit, man, just cut it. And maybe you use manual lockout up because you trade with Top Step X. Most people probably aren't going to trade with Top Step X. But if you're going to make it in this, you have to have some level of discipline. You have to take it somewhat seriously. And in your case, you actually know what the problem is. You can identify it. You have the pattern. So maybe you've journaled or maybe you just figured it out, But most people don't even know what the problem is. So step one we talked a lot about was journaling. Start to figure out what these patterns are, these issues, so you can make some small improvements. Not reinventing the wheel, not strategy hopping, not trying to find the golden goose, the golden holy grail. There's none, but small improvements to make yourself a little bit better each day. For you, you already know what it is. I can start trading well, I make money, and then I give it all back. Stop yourself, set a rule, and see how that works out for a week or two, and stick to the rule. Find a way to make yourself stick to the rule. Close the stuff down, lock your computer in a room, log out completely, shut everything down, put it out somewhere where it's inconvenient. Make sure you have to go on a run as soon as you're done trading. So you're forcing yourself to do it. If you're dealing with this, you probably are struggling with the discipline side of it because you know what the problem is and you just can't cure it. But get off the charts, step away. You're not going to just keep continually making money. It just doesn't work like that. You're not just going to trade green for forever. And especially if you're giving it all back, it sounds like you're over risking or you're not closing your losing trades. So, there's probably some efficiency issue that's happening once you get into profit. So set a rule for yourself, brother. Maybe it's 2, maybe it's 1. Base it off of your journal or however it is that you've been keeping track of your data, and follow that rule. And that'll be step 1. And then, see how that goes. Maybe you need to make it stricter. Maybe you need to make it less lenient, but start to develop some discipline. Decide whatever it is and then stick to it. Otherwise, just if you're not going to do that, you should probably just back off for now. You should take a break and decide when you come back if this is something that you actually want to be, serious and disciplined about. It's not easy to do, but write the rule down, write it on your piece of paper, put it on your computer, whatever you have to do, and then stick to it. Walk away, end it. As soon as you hit that rule, close everything down quickly, just get away. So, thanks, man. This guy's 100%. It's legit 100% recommend the Discord to everyone. Thank you, Bruce. Got guys from Discord in here. I appreciate you guys, man. Yeah, it's an awesome community. If you're not in the free Discord, I recommend you hop in. If you guys got any more questions, rapid fire them away, man. Shoot them my way. I don't have anything major else to yap about. If you're on here, hit the like button if you like the stuff. If not, feel free to not like and subscribe. But help me out if I'm helping you out. And again, free Discord, giveaways, live trading, market analysis, insights about news every day. A whole bunch, man. But yeah, man, question time. Ask away. Trading questions, risk management stuff, platform stuff, whatever. Just keep it trading related if you can. Otherwise, we'll check out how the markets are doing and yeah, what a tear from the U.S. indices, man. Nasdaq just creeping higher. Yeah, all the way up at all-time highs. Best broker for futures and Forex. So I'll answer this 2 ways. I'll give you my opinion. In the futures market, I can give a little bit stronger of an opinion. In the Forex market, it's going to vary heavily based on where you are located. So first and foremost, no suggestion or recommendation to do anything. You know the disclaimer. Read the disclaimer in the description. Second, rules and regulations and laws are different everywhere. I'm in the U.S., so mine is going to be biased to the U.S. If you're in Europe or in Thailand or in South America, something, you probably have completely different rules, especially in the Forex market. They vary drastically. So I have to use U.S. regulated Forex brokers like Forex.com or Owanda. Those are some of the big names. They have to abide by all of the U.S. regulations, low leverage, all these rules, first in, first out rules, all these different rules. Let me get rid of that's just individual messages popping up. All these different rules, man. So if you're looking at Forex brokers, do research on your own for your own country. Things I would look at. Number one, that they're reputable. They have good reviews. They seem legitimate. They're based in a country that's regulated by some degree. They're not just a completely offshore, unregulated broker. You could also look at things like leverage, spreads, fees, commissions. Everybody pays swaps, but you could look at some of those things. You can trade on demo with that Forex broker to decide if everything seems like it's going to work well. And then I would also consider only putting a small amount of money in, trading with that first. If you're going to put live money in, I don't recommend anybody does anything, and maybe withdrawing from that broker and making sure you get your money. You can get money in and out before you just stack up a whole bunch. For futures, if you're going to trade with a prop firm, I would go. My affiliate is for Top Step. Top Step X has been working out pretty cool. That's the one that I've been working with. If you were going to go with just an individual broker, the only one that I honestly have experience with is Tradovate. They worked pretty well for me. The charting itself, the platform itself was pretty cool. They have a mobile app. They're a legitimate, larger broker, and they integrate with TradingView. Sorry, that's what I was getting at. They integrate with TradingView, so you could log into your Tradovate account on TradingView and trade directly from TradingView as well. So that's a benefit. I experienced some lag. Most of what I was doing was a Top Step Tradovate account integrated with TradingView. So maybe that had something to do with it. But that's who I would look at. I know NinjaTrader is huge. And then you've got a whole bunch of other really large, brokers for futures. I would go with one of the larger ones just for safety and, security reasons. But do your own research, make sure they have the tools. Some guys want to use a lot of order flow. They want to use different tools with their, within that platform. Make sure that broker has it for you, and you can go with that. But my experience with Tradovate was pretty good. I'm not really messing with too much of it right now because I'm just focusing on these little 50K Top Step accounts. Top Step X accounts, I should say. That program rolled out last week. If you don't know about that, new platform from Top Step that acts as their all-in-one. You buy the challenge, you trade right from Top Step X. It's actually a TradingView chart, just like this that you're trading on. And you don't have another broker separate. Before, the way it worked, if you went with any prop firm, Top Step, Apex, Take Profit Trader, any of that stuff, you would pick what broker you want. Like you would pick Tradovate or NinjaTrader or somebody else, and then you would log into that account. Maybe you could integrate it with TradingView, but that was the process beforehand. Top Step X has their own platform to trade with. So that's my breakdown, man. But honestly, do your own research on this stuff. It's different for everybody. For Forex, it's very different based on where you are. Any other questions, guys? Let me know. Otherwise, we'll call it, and we'll see if we take an overnight trade. And we'll be back tomorrow for some live trading on Thursday. Questions in the chat. Ask away, guys. All right, cool. No more questions. Guys, thank you for being here. I appreciate you being here. If you're not in the free Discord, hop in the free Discord. If you got questions for me after the fact, you can ask them in Discord. We could talk about trading. We could talk about, about making steps towards profitability. We'd be happy to have you guys in the community, free, and hopefully you guys will find it valuable. Either way, I'll see you guys tomorrow here or in Discord. Have a good night.